Well, welcome back. You're really going to enjoy this session because we're going to talk about those contracts. We're going to talk about installments. But for the past 30 years, I've been involved in an alternative part of real estate, which is called tax lien certificates and tax defaulted property. So most people just call them tax liens and tax deeds. So for sure, this is an easy business because buying real estate with discounts of 60, 70, and 80%, everybody wants to do that. However, it's a little bit more challenging in the selling part. And why is it more challenging in selling? Well, mostly because people can say no. So most people don't think they're very good at selling things, and they can be good if we give them the right strategies. What does that mean? Well, if you've got a competitive advantage on pricing, that's a heck of an advantage. And if you know how to sell and you know how to market a little bit, you're going to do okay. So unfortunately, most people believe that selling is too much of a challenge for them. Well, I'll show you today that it's not, especially if you get involved in installment sales. Now, for most people, selling stuff is tough. However, this installment sale makes a big difference and it gives you a big advantage. Now, I know why you don't like to sell stuff, because people reject you. They say no. Sometimes they're abrupt. Sometimes they're gentle, but generally speaking, they're a little on the rough side because they're nervous themselves. So in this episode, I'm going to answer your question, what is an installment contract for sale of real estate? And we'll kind of go through this step by step, and you'll get it, but I'll be right back with all the details. Okay, so let's start talking about properties worth $100,000, $200,000, and how are you going to get it sold? Well, in most cases, the person selling is going to go to a bank and try to get a loan. Well, it's not always necessary to get a loan from a bank, but if you can and you qualify, well, certainly, because the rates are low. So we're going to talk about installment sales with you being the seller, and you could give an installment sale, get a down payment, and then you could get payments for 5 or 10 years. So you'll do the work once and you'll get the payments from any time. So most people that don't qualify at the bank, they definitely want to have an installment sale. So without a mortgage, you're probably going to have a tough time selling real estate because people don't have all the cash. So lenders, banks, they provide this cash for people to buy, but you're going to have to qualify at the bank. So if you have to qualify, that means you're going to check your credit. Now, is your FICO score okay? Have you made all your payments on time? Have you been late on your credit cards? Okay, so property's not going to sell unless you can get a mortgage. So if you can't get a mortgage and the buyers can't get mortgages, well then that's going to stop the real estate. Everything's going to grind to a close simply because the people can't get a loan. So if they can't get a loan, so if your buyer wants to buy but he can't get a loan, well then maybe you want to start thinking, what is an installment contract for the sale of real estate? Well, installment contract is going to be the same as it would be for a car or for a refrigerator or a big screen television. It means you make a down payment and then you're going to make continuous payments. Now, the government controls the banks. So when the government took over the control of the banks, they said, we're going to have certain standards that you'll lend. You can't lend if it's not within those guidelines. So that means people had to stay between these lines. And that meant they had to have a good FICO score, and they had to have a good job, they had to have a good history. In other words, there was a lot of rules. So mortgages and deeds of trust, if you're going to get one of those from a bank, you're going to have a good FICO score, and your client's going to have one. All right, well, we're going to buy properties at tax defaulted auctions that might be slightly used or abused, and they're not in perfect condition. Well, the bank is not going to like that. They're going to make you do a home inspection. They're going to make you do a new appraisal. In other words, a lot of things are going to happen. So the banks restrict the loans because of all the standards. However, you want to sell, so what do you want to do? Well, if the bank won't lend, then you need to be thinking, what is an installment contract for the sale of real estate? So what you're going to do is you're going to create, through the title company or an attorney, a contract which is nothing more than an IOU, and the IOU says, all right, they will pay on time, they will pay taxes, and they will pay insurance. If they're going to do all those things, well, then you as a seller are pretty much protected. So that's what this is all about when we talk about an installment contract for sale of real estate. Nothing complicated about it. Now, keep in mind, real estate is going to come to a stop every few years. It's going to be a cycle. We're going to have a cycle of easy money, then it's hard money. Easy money, then hard money. Why? Because the economy keeps changing. So if you get in a situation where you bought a property and you made a great deal in buying it at a tax defaulted auction, well, at that deed auction, you might have bought a property for 20, 30, or 40 cents on the dollar. So you have a lot of margin between the 30 and 40 cents and the 100% that it's worth. So you'd like to not only make a profit there, but you want to be able to sell it. If there's no money coming from the bank, the real estate business just absolutely slows down. In some cases, it stops. So not only properties don't sell, but the builders can't build, the carpenters don't work as carpenters, the bricklayers don't work as bricklayers, the brokers don't work, nobody works unless there's going to be money for people to buy. So the banks pretty much slow down because the government slows them down. So that doesn't have to slow you down. So if a person's going to buy a $300,000 house, and if they can't get a loan, well, then the transaction's going to stop. So you might be in that range, you might be slightly less than that. So if you're less than that, you want to think about, are you willing to give an installment sale? In other words, an installment contract for the sale of real estate. All right, you're going to keep the economy going, not only because a broker could help you sell it, but a carpenter could help you fix it. You could build walls, you could do a lot of things. In other words, a lot of people keep going based on the financing of real estate. So installment contracts are important. So how did I learn this? I learned this when I buy properties. I want to sell them quickly. Well, the quickest way to ever sell a property is be able to finance it. Okay, now if you can finance it, you can make a deal right now. You don't have to wait for a bank approval for the loan. You don't have to wait for the appraiser to come. You don't have to wait for the home inspection. You can make the deal this afternoon by doing it on a contract. Now, I know you don't know a lot about contracts right away, but everything you need is that a title company or an attorney can provide it for you. You're getting the idea. So if you could have a contract that you could sell it, that would be an IOU for you to get paid, and it would lay out and stipulate all the things that had to be done. For example, if you sold the property, do you want the person to pay taxes? Yes. Do you want them to pay the insurance? Yes. Do you want them to pay the payment on time? Yes. If they pay it late, are you going to charge them for it? Yes. You're getting the idea. That's what a contract is. All right, so the banks and the lenders, they approve individuals that have good credit scores, good payment histories. All right, the people that come to buy your property might not have a good FICO score. They might not have always paid their bills on time. All right, so you want to lend to them, that's perfectly okay. So when you lend to them on a contract, you want to be protected. So when you sell to them, that's A-okay. Nothing wrong with that. Just don't give them the title to the property. So in good economic times, the banks are their best bet. Why the banks? Because the banks are going to lend, at least in this market, at 3 and 4%. You're going to lend at 9, 10, and 11%. So you're going to make money on the financing. So the first thing you make money on is when you buy. You make all your money at the auction when you buy, and then you're going to mark it up and make your profit. And then when you sell, what you're going to do is you're going to make another profit on the installment contract. All right. Now, the bank is definitely going to reject anyone with a low credit score. The big problem for people buying is they have a low credit score. So you cannot solve that problem. However, you bought a property that was unwanted, and now you're willing to sell it considerably below the market. So I say buy it low, sell it low, do it fast. Well, if you want to do it fast, not only have a competitive price, but be able to finance it. And if you're going to be able to finance it, you're going to do that in a contract for the sale of real estate. All right, now, how did these properties even get into the inventory? How did you even know about it? Well, it starts out with the legislature of the state. They tell the county treasurer via the supervisors or the board of commissioners, all property must be taxed. So levy the tax, collect the tax. If they can't collect it, seize the property and sell it at auction. So you bought it at the auction, so you bought it without a mortgage. Well, that was a good deal. You probably paid 10, 20, or 30 cents on the dollar. Now, in all 3,000 counties, you can do this. So you can buy properties for way under the market, 60, 70, 80% under the market. But now your challenge is, what are you going to do about selling? So today's episode is all about what is an installment contract for the sale of real estate. Well, it's a way for you to get rid of that property, basically. You want to get rid of it, so you're not going to try and get retail price. You're going to try to sell it at a lesser price, and maybe you bought it at 10, 20, or 30 cents, but you can sell it for 50 or 60 cents. When you do that, you're still giving them an outrageous discount, and you're helping that buyer out. Okay, that buyer more than likely still has a good job. Maybe they worked in the same place 10 or 12 years or whatever. If they've got a good employment history and they've got a good job, it's not going to matter what their FICO score is. All right, now let's talk about these FICO scores. Those scores are made by a credit agency. Okay, the bank is going to stay within the guidelines. If you have a low FICO score, you're not getting a loan from the bank. However, if you're a seller, you can look and say, well, look, you worked in the same job 15 years and paid, and you're making good money. I'll finance you, and I'll do it on a contract. And if you don't pay me on the contract, it's an installment contract, you don't pay me, I'm taking the house back. And you don't have to do a foreclosure. You can just kick them out. All right, so what if you could buy a property that was worth $100,000 or $90,000, and you could get it for 10 or 20 cents on the dollar? Well, that'd be a great deal for you. Now, I'm not talking about bank foreclosures. What am I talking about? I'm talking about tax defaulted auctions. That means the treasurer in that county not only issued a tax bill, they tried to collect it, and when they couldn't, they confiscated the property, and now they're selling the property, and they don't have to sell it at a high price. They just want to get 10, 20 cents on the dollar and get it back on the tax roll. All right, so all those rules are made at the state legislature level, not by Ted Thomas and not by a broker or anyone else. All right, so the problem has been that people buy the property, they actually buy it from the treasurer of the county, now they want to resell it. All right, but the banks don't want to finance the property. So now, in order to sell it, you're going to use an installment contract. The installment contract is nothing more than getting a down payment and an IOU installment payments for the next 7, 8, or 10 years. Well, that's a great deal for you because you can make a profit when you sold the property, and you can make another profit by financing because you don't have to finance at 3 or 4%. You could use 8, 9, or 10%. Now you're going to make money on the financing. All right, so there's two revenue sources here, and they both go to you, all because you understand what an installment sale is when it comes to real estate. All right, so today's question is a simple one. What is an installment contract? It's nothing but a document that says right in it that you're going to lend money to someone, they're going to make installment payments, they're going to pay the taxes, they're going to pay the insurance, and they're going to pay you on time. And it also says right in the contract, if they don't pay you on time, you're going to take the property back. All right, is that a good deal? Yes. It's the same deal you have in a car. You buy a car, you don't pay it, the repo man comes and picks it up. You don't make payments on real estate contract, the owner takes the property back. All right, now who buys these properties? Well, they're people that don't qualify at the bank. And when they don't qualify at the bank, they are desperate to get a property. They don't want to be in the rental business. They want to be in a property that they own, that they're building up equity, and they're taking care of their future. All right, these are installment notes. These are installment contract. Anybody can have an installment contract on what they're selling. Where would you go to get that? A title company has those. Attorney can make it up for you. If you go to the title company, it's a lot cheaper than the attorney, but I do both so you see what they both can do because contracts are going to be different. And the different contracts are the ones that are going to make the most money. So you want to pay attention to that. So how much money can you lend? You can lend 100% if you want, or you can lend 70%. You can get whatever down payment. You can make your own rules. You're your own banker. You definitely want to get a down payment. You do not want to transfer the title. You want to transfer the property to them and hold on to the title until such time as all the payments are made. The contract will say that they get the title when they finish making their payment. So thousands of people out there, probably 20% of the market, have poor credit scores. When they have poor credit scores, they're looking for owner-seller financing. That simply means someone's going to give them an installment contract for the sale of real estate. All right, so buyers with difficulties, that's what they're looking for. What are you looking for? You're looking for the revenue on the upside between what you purchased and the real value, and in order to make money, you'll make money on the contract for sale. All right, so I'm all finished up for this particular session, and below me there's a free gift for you, but I do want to give you a couple of words of caution before I go. Number one, don't buy any property that you haven't looked at. If you haven't had boots on the ground, Look, there could be a fire, there could be a hurricane, there could be a flood, there could be any number of things go wrong. It might be next to a chicken farm. People don't want to be next to a smelly chicken farm in July and August. All right, so the point is, don't buy anything that you haven't had boots on the ground or someone you know has done that. Second big lesson to learn is don't buy anything unless you know at the selling price. In other words, have an exit strategy before you buy. So right below me is a free gift. Why don't you go there now?